Welcome back, guys, to another video on Forex Guide. Today's video is about what is fundamental trading. So fundamental trading is an approach where traders make decisions based on economic data and financial news to predict the future movement of price in the market. Unlike technical trading, which focuses on price charts and patterns, fundamental trading looks at the underlying factors that influence the value of an asset. In Forex, stocks, and other markets, fundamental traders analyze factors such as interest rate, GDP, employment reports, inflation rates, and political events. The goal is to understand how these economic factors will affect the supply and demand of a currency or asset and, in turn, influence its price. Key concept in fundamental trading: economic indicators. Economic indicators are reports or statistics that gives insight into the health of an economy. These indicators play a critical role in determining the value of a currency or an asset. Some important economic indicators of Forex that Forex traders include is first, interest rate. Interest rates set by central banks influence the currency values. High interest rates often strengthen a currency as they attract foreign investment. Number two, GDP. The GDP of a country measures the total value of all goods and services produced in that country. A growing GDP typically signals a strong economy, which can lead to a stronger currency. Number three, unemployment rate. A low unemployment rate generally suggests a healthy economy, which can be positive for the currency of that country. Number four, inflation. Inflation reflects the rate at which prices of goods and services rise. Central banks may raise interest rates to control high inflation, which can strengthen the currency. Number five, Consumer Confidence Index, CCI. This measures how optimistic consumers feel about economy, influencing spending and investing behaviors. News events and reports. News events and economic reports can greatly impact assets price. For example, a positive earning report for a company can increase its stock price. Political events like elections or trade negotiations can cause currency volatility. For example, the outcome of a Brexit referendum had a massive impact on GBP USD. Natural disasters or unexpected geopolitical tensions can also cause large price swings in the market, like commodities or stocks. Interest rates and central banks. Interest rates are among the most crucial drivers in fundamental trading. When central banks raise interest rates, it often causes the national currency to appreciate because higher rates offer better returns to investors. For example, if the Federal Reserve raises interest rate, the USD, which is US dollar, tends to get stronger as investors flock to higher returns in the USA. Supply and demand. Fundamental trading involves around concept of supply and demand. For instance, if a country experiences significant economic growth, demand for its currency may rise as investors look to capitalize on its performance. Commodity price, such as, for example, gold or oil, can also affect currencies. For example, XAU-USD is impacted by the factors like global demand of gold and economic conditions. Geopolitical events. Political events such as elections, trade wars, or wars can create significant volatility in the market. Traders analyze these events to forecast how they will impact economic conditions and asset values. A significant example was the US-China trade war, which created massive fluctuation in the US dollar and Chinese yuan. Market sentiment. Market sentiment refers to overall feeling or mood of the market. It's often driven by news and reports and can be either bullish or bearish. Fundamental traders track news and reports to gauge market sentiment and make decisions accordingly. How does fundamental trading work? Number one, analyzing economic data. Fundamental traders track various economic indicators and analyze economic reports to predict currency movements. For example, if a country's GDP grows more than expected, traders might anticipate that country's currency will strengthen. Number two, news and events impact. When significant news events occur, fundamental traders assess how those events will affect the market. For example, if the ECB unexpectedly cuts interest rate, the euro could fall in value. Number three, making predictions. Based on the economic data and news reports, traders predict whether a currency or asset will rise or fall. They then take positions accordingly, buying or selling the asset based on their prediction. Number four, long-term focuses. Fundamental trading is often a long-term approach. Traders may hold positions for days, weeks, or even months, depending on long-term economic outlook. Number five, risk management. Just like in any other type of trading, fundamental traders use risk management techniques. They might set stop loss orders to protect themselves from sudden market swings after unexpected news. Why is fundamental trading important? Informed decision making. By understanding the economic conditions, fundamental traders can make better informed decisions. Long-term opportunities. It allows traders to benefit from long-term trends like a country's economic growth or decline. Number three, global events impact. Fundamental trading helps traders understand how global events impact currency value and market conditions. Now, example of fundamental trading in XAUUSD, which is also known as gold versus US dollar. Let's say you're trading XAUUSD and you notice the following. The US Federal Reserve is expected to raise interest rates in near future. The US dollar strengthens because the higher rates make gold relatively more expensive in USD terms. On the other hand, if global economic conditions are uncertain, investors might turn to gold as a safe haven, pushing the price of gold higher. Based on these fundamental factors, you may predict the price of gold will fall as US dollar strengthens due to interest rate hikes. So that was all about fundamental trading, guys. I hope it all made sense. Make sure that you watch all the other videos and educate yourself before you start trading. I'll see you guys in the next video.